Welcome back, everyone. Next, we have West Red Lake Gold Mines Limited. It trades on the OTCQB under the symbol WRLGF and on the TSXV under the symbol WRLG, and is a mineral exploration company that's publicly traded and focused on advancing and developing its flagship Madsen Gold Mine and the associated 47 square kilometers highly prospective land package in the Red Lake District of Ontario. Please welcome the Vice President of Communications, Gwen Preston. Welcome to the conference, Gwen.
Thank you so much, Anna. Thanks for having me. And thanks everyone for being here and for your interest in the stock. I'd love to take you through this story. This is a really exciting story for anybody who is interested in the gold bull market that is underway most clearly, and who is maybe looking for a way to get a little bit of leverage on that gold bull market. And I say that because the way to get the best leverage in my investing history, from my experience, the way to get the best leverage on a rising gold price is by investing in companies that are aggressively increasing their gold production. And we're about to go from zero to producer next year. We're going to be a rare company with a new gold mine. And I think it's a very exciting investment opportunity for that exact reason, and it's a very near-term reason. As I have already done, I will make forward-looking statements, so those are the disclaimers there about that. So West Red Lake Gold is a company that came together 2.5 years ago when two guys got together and realized that they shared perspective, which shared two perspectives. They were that there was a gold bull market coming, and that the best way to give investors opportunity in that market is with production growth. The two guys who shared those visions are Frank Justra, very successful mining financier and investor, one of the most famous in Canada, and Shane Williams, a really experienced mine builder. So they got together and decided that they wanted to build a new gold mining company to create that investment opportunity for shareholders in this gold market. To do that, they needed an initial asset, and they found that asset in the Madsen Gold Mine. I will certainly go through the story of the Madsen Gold Mine, but let me set the stage a bit before I do. The key point here is we are going into production in 2025. We are about to put out the official study that outlines precisely what that will look like. We have timelines internally when we're going to turn on the mill and when we're going to have stockpiles ready. And our goal is to have this mine producing gold in the second half of the year. Importantly, this is a fully permitted situation. We do not have any permitting risk. It is largely built. It is built. There's just some of the last parts of the de-risking and preparation for mining work underway right now. And that re-rate that I'm talking about, the fact that companies that are putting new gold mines into production usually enjoy a re-rate from spending money to making money, I think that there's some real solid rationale for why that's going to apply to West Red Lake in 2025. We're about to put out that mine plan that will clarify just how close we are to production. We recently announced a finance package. We're working through the last details of the loan portion of that finance package, and we put $27 million new dollars in the bank from an equity raise. So we have access to the capital that we need to get this mine into production. So that's a really important factor. And we're just very close. It's all about to happen. And as we put this mine into production in 2025, we will make clear that the first version of this mine, the one that we're turning on next year, is the first version, and that there's opportunity to make Madsen's bigger beyond that. We're going to start telling that story quite loudly in 2025. So that is the next iteration of the investment thesis for West Red Lake Gold. The first rare new gold mine going into production, that's happening next year. And then beyond that, the first version of the mine that we start up will be good. It will be a good, modest sized gold mine, but we believe that the size can increase notably in the near term as we incorporate some additional opportunities that are right there around the mine site. This is where we're located. We're on the western edge of the province of Ontario in Canada, district called Red Lake. Famous gold district, has produced 30 million ounces of gold from really rich rocks. And our mine contributed 2 million of those ounces back in its first phase of operation. So that was from the late 30s to the early 70s. This mine produced 2 million ounces from 9 grams per ton, or on average. Really good operation back then. They did some great exploration as well, including these old timers did wildcat drilling and found what's called the 8 zone, which is a nice small body that's below the main ore body at the main resource at Madsen. And that 8 zone at the bottom grades 3 times, has 3 times the amount of gold in each ton of rock compared to the main resource. That was so tantalizing that they drove a shaft all the way down to 1,300 meters so they could start mining that opportunity. So that worked really well for them, but in the early 70s, gold wasn't worth very much, and it was expensive in those days to keep that sort of mine dewatered, so it shut down. Fast forward to 2015, and in the interim, there was a few kicks at the can, but nothing that was particularly notable. In 2015, another company called Pure Gold bought the asset, and over the next 7 years, did a lot of very good work, 180,000 meters, 180 kilometers of drilling to define the resource. That is still the resource on the asset today, 1.7 million ounces of gold in rock that averages 7.4 grams per ton. And then they got to building the mine, and that's where they made a few missteps. Unfortunately, those missteps were costly, and it meant that their operation shut down after only 14 months. Shane and Frank, looking for an asset to ground a new gold mining company, went and looked at the Madsen mine and realized that the missteps were things that were fixable. And they were fixable specifically with the set of skills that Frank and Shane bring, which is you needed some deep mining expertise, which Shane brings. You needed access to capital, which Frank brings, and in conjunction with Shane. And you just needed the right approach. So they bid on the asset, and we were able to buy this mine in which $350 million had been invested very recently. We bought it for $6.5 million plus a 1% royalty, and the debt that the main lender, who ended up owning the asset, converting their debt into equity in our company, they became about a 20% shareholder in West Red Lake. So here's a bird's eye view, literally, of that Madsen mine. Here's, you can see the blue building is the mill that they built, a fantastic mill. The thing that sticks up there is the shaft, the head frame on the shaft that goes down to 1,300 meters. Over on the right there, behind the word future, that's the tailings dam. This is the mine. This is the inside of the mill. There's a lot to say about the mine. The mill, really great piece of equipment, performed very well for the prior operator. It's not one of the things that suffered from a misstep. And so we're very confident in that mill. We're doing some of the commissioning work to just get it back ready to turn on. But the mill was a really strong piece of machinery. So what did go wrong? Why did this mine fail only 2 years ago under this prior operator? What were the missteps? Well, the missteps can really be summed up in 2 things. First, they failed to deliver mineralization to the mill that was anywhere close to the grade of gold that they expected. They expected 8.5 gram per ton material delivered to the mill. They only managed to deliver 3.5 gram per ton material. So why did that happen? I think it really comes down to they did a lot of good drilling to define the resource, and then they pretty much stopped drilling. They did not continue to refine their understanding of the resource as they engineered the mine, built the mine, and started mining. And the problem is that we're in Red Lake, and the Red Lake mineralization is fantastically high grade, but you have to work for it. It is in narrow veins. There's like a lens of gold here, then there's nothing, then there's a lens of gold, then there's nothing, then there's maybe a big lens of gold. You have to, I always say, hammer these systems with drill holes so that you get a very accurate understanding of precisely where the gold is before you go in to mine it. And that's really what they didn't do. They mined a resource where the drill holes were on average 20 meters apart. Our premise is that the drill holes need to be 6 meters apart to have sufficiently accurate understanding of where the gold is. The short version of it is they let the mineralization get away. They didn't really have a good hold on the gold. So fundamental to our restart approach is a whole lot of definition drilling. We've done almost 45,000 meters of definition drilling. That's from underground workings. We're down in this mine. We're drilling from underground. We're hammering parts of the resource that we already know are there, but with a whole bunch more holes so that we really know where the gold is, and we can target it with selective mining underground. And we believe that the combination of accurate understanding and accurate and sufficiently refined resource model, plus more expertise in how to mine those areas selectively, will enable us to deliver material to the mill of the correct grade. Now that gets into a slightly technical conversation. I'm happy to go into that in more detail. Maybe you can ask me some questions if you have more on that, or we can have another call later. But that's a really fundamental tenet of our restart. Our restart is that it takes more drilling and it takes more selective mining, and that is what we are going to do. This is just one example of some of that drilling. So the colored blobs are the resource model. You can see and the little circles that are on lines are the gold intercepts on drill holes. So you can see we get lots of good intercepts where the model already knows that there is gold. And in some places we get to extend that model. You can see some nice purple high-grade hits extending down from the little sparse yellow areas of the resource on the right side of that. So that's just one view of what some of this definition drilling can do. Okay, so when we're talking about what went wrong with the prior operator, certainly delivering material of the needed grade to the mill, that was one place that things went wrong. The other place that things went wrong for them was on the cost side. So their operating costs were much higher than they expected. And there was a few reasons for that, but they really come down to the insufficient spending before they got into operations. So they really tried to build this mine on as small a budget as they could. And that had two key outcomes. One of them is that where possible, they often pushed costs from construction into operating. Think about like leasing things that you might have otherwise built. If you build them, that cost, you have to deal with it up front, but then you don't carry it in operations. They chose the other path, which is that they carried those costs in operations through leasing things. So that certainly increased their operating costs. They also just decided to not do some of the projects on site that would have made a more efficient mine. The two things that you really need to do for a mine to work are mine mineralization accurately of the grade that you expect and move those tons of rocks efficiently. Really makes a difference on your bottom line. And so there were a bunch of projects that they did not do that would have created a more efficient mine. And this connection drift is one of them. And that this is something that we actually just put out a news release this morning that we are halfway through the green tunnel that is shown on this picture right here. So there's two, the prior operator had a plan to develop a new portal and a new ramp down into the Madsen mine, because they realized that the old portal had some inefficiencies. It's a small opening. You can only get small trucks through it. You have to cross public roads to get from that portal to the mill, which means you have to drop the rock and reload it. That's something you try and avoid if at all possible in mining, because that is a cost. Goes past the town, so they were restricted on only being allowed to make noise going past the town during daylight hours. And also just the west portal ramps are a historic setup. And so they're twisty and turny and steep in sections, and you have to drive a long way to get from the west portal over to, for example, the Austin area. It's a long trucking distance. So they call it this new east portal, and then they decided that they didn't really have enough money to connect that portal, so they didn't advance it. They went over and mined out of the west portal and had to manage all of those inefficiencies that I just described. We don't want to do that. We want an efficient operation. So we're driving that connection drift over so we can use this beautiful new, large, smooth, efficient east portal that is right beside the crusher in the mill. That's a $10 million project. We're halfway through it. We put out that news this morning. That's the kind of investment that we're making before operations to ensure that this is an efficient mine when we turn it on. These are some other examples of the kinds of projects that we're doing on site to set ourselves up for success. We proactively did a tailings dam lift. You know, the tailings dam is where the water from the mill, the water and spent rock from the mill gets placed after processing. We already have that tailings dam. Like I say, this is a permitted operation. The tailings dam exists. It's been there for many, many years. It did need a higher wall. That needed to happen in the first few years of operations. We did that ahead. so that we didn't have to bear the cost in operations, and so that we just didn't have to do the work during operations, where you ideally want to focus on mining and not on other capital projects. So did a tailings dam lift. We're building a maintenance shop. That may seem like a small thing, but when I talk about moving those tons of rock efficiently, you need your rolling stock, the equipment that mines the rock, scoops the rock, trucks the rock. You need that equipment to be available. To make sure that you have good equipment availability, you need good mechanics. And the best way to attract good mechanics to your mine site is to have a nice maintenance shop, not to ask them to lie in the snow and the mud to take care of your load haul dumps and your jumbos and all of that. So we're building a mechanics shop so that we can do our very best to have good equipment availability. We're installing a new primary crusher, which is one of the things that they had leased and also just was not particularly well integrated into the process. So there were some problems with the previous primary crusher. We're building a camp. So right now, 60% of our workforce is drawn from the local community, the Red Lake community. This is a mining community. This is why the town of Red Lake exists. But the other 40% are coming from out of town. Now, the prior operator housed out-of-town workers in rented apartments in the town of Red Lake. That was a costly and uncontrolled situation that required an entire person as well just to manage that accommodations role. We're building a camp on site, so we have efficient, controlled ways to house people, and we can attract good people because we built a nice camp, and then we can get good employees. Good employees are very fundamental to the success of any business. So these are some of the capital projects that we're doing to set ourselves up for success. Right now, we are also test mining. I think this matters because, first of all, let's practice something before we do it in operations. So we're down there, we're test mining, we're getting our crews up to speed, making sure that they can mine with the speed and accuracy that we need them to. And we are also in this process generating bulk samples. Those bulk samples will be processed in the mill probably in March. And then what really matters there is our premise is that through more definition drilling and better resource modeling and better mining methods, we can deliver material to the mill that's the grade we say it's going to be. So let's demonstrate that. Let's do some bulk samples and process them through the mill. And assuming we can generate positive, what's called reconciliation between what we say we're going to mine and what we actually mine, that should really help the market buy into our entire thesis. So that is already underway. It's a very exciting part of it. This is a waterfall slide that pulls together what I've been talking about, all of the things that are underway and have been underway in 2024 at the mine site to prepare us to be able to turn this asset on, and the ongoing efforts below that in instilling a really strong safety culture, making sure that our environmental systems are up to snuff or above, finding, hiring, training personnel on site, making sure that we're engaging well with the community. All of this is underway. That golden dashed line down the middle there sort of marks when we expect the pre-feasibility study to come out. That's the mine plan. That's the version of the mine plan that we're going to put out into the market that explains what this asset is. That's going to be an important document because most mines happen in a sequential order. You find the resource, you engineer the resource, you permit the resource, you finance it, you build it, and you put it into production. We bought a mine that was already built and financed, but that needed some work. We've been doing that work, but we haven't had a chance to put out the official mine plan yet because we needed the work to fill in some of the data before we could do that. So the market hasn't had very good clarity on exactly what this mine is going to be and how close we are to turning it on. That PFS is imminent. And then I think when that comes out at the beginning of January, I really think that the market will suddenly realize that this is an asset, this is a gold mine that's about to turn on and that is essentially funded. And that is a very enticing opportunity for investors who are looking for leverage in a rising gold market. Mining is risky, so mining is about risk mitigation. This is a complicated slide that I won't linger on today, but it identifies a bunch of the key of the risks that have actually derailed or created big stumbling blocks for new mines over the last 10 or 15 years. And then it explains why some of those risks don't apply to the Madsen mine. Not every risk applies to every kind of mine. Or for the risks that do apply, how we are managing them. This is really to just drive home the fact that we are mine builders, we are mine operators, and we are managing the risk of this mine as our foremost concern. This slide captures the near-term investment thesis here. If we look at this bar chart on the left, that's showing the price to net asset ratio that companies, the gold mining companies generally get in the market as they progress from being an early stage company through to being a mining company. Now we're being valued as less than an unfinanced developer, when actually we are a financed, almost junior producer. So I think that is a tangible demonstration of the potential for our share price to respond when the market realizes that production is around the corner, and or in 2025, as we deliver that production, for the market to say, oh gosh, this market valuation does not line up with the realities on the ground here. We better change that. So that's the near-term investment thesis. The slightly longer-term investment thesis is that mine plan that we're going to put out in January is for our first mining opportunity. It's by design a fairly conservative look at what this mine can deliver in the next few years, because we need to meet or beat every parameter in that mine plan. But we do believe that the Madsen mine can be more than what we are going to outline in that initial mine plan. There's lots of examples of once you get an underground mine operating, being able to unlock those additional opportunities. And they're not just arm wavy for us. We have several zones on the Madsen project or on our nearby Rowan project that have higher grade mineralization that we believe we can pull into the mine plan in just a few years to amplify the returns, make the mine bigger, make the mine higher grade. Those are things that really matter for the money that a mine can make, and therefore for the value that that mine gets in the market. These are examples of that high grade 8 zone that I referenced. When we pull it into the mine plan near the end of that initial version of what Madsen will be, it makes a big difference to cash flow. So we want to see if we can find more 8 zone type mineralization. We are actively working on that. We've tagged into something that we're calling upper 8 just recently. We're going to see if we can flesh that out. There's several other zones that we're interested in pulling into that new mine plan. That's the next level investment thesis that we will layer on top of the let's move this asset into production thesis as it plays out in 2025. This is our capital structure. We do have $25 million in the bank, 18 million shares out. Good set of shareholders here, a lot of them long, gold interested, understand the opportunity here. And I think I'm going to leave it to that. Anna, are there questions out there that I can answer from the audience?
Yes, absolutely. Let's jump into some of these questions. Lucille wants to know if you've identified your production cost per ounce.
Yeah, so thank you for the question, Lucille. That pre-feasibility study that's going to come out in sort of the first week of January will lay out all of those numbers. I shouldn't talk about those numbers before that study comes out, but I can say that there are analysts out there who have built their own models of what the pre-feasibility study will look like, and they generally come in with all-in sustaining costs. So everything that you need to produce that ounce of gold and keep the mine going, their all-in sustaining costs are about $1,400 per ounce. And I think that that's a reasonable starting place if you're building your own perspective on this opportunity.
And Bob wants to know what the status of the Nambari financing is, and when will the company drill the deeper 8 zone?
Two good questions. So Nambari is, I mentioned that we raised $27 million near the end of October and announced a $35 million US debt facility with a group called Nambari. So if you're familiar with Nambari, they have been pretty active in financing junior development stories in the mining space recently. You may also know that they've had some that haven't worked out particularly well, and one of those unfolded even during our negotiations. I bring that up because it's just meant that their level of their level of inquiry and what they need to accomplish, what they need to check off in their due diligence process has been increasing as we've gone through this negotiation. So we announced that non-binding term sheet, and it's just taken longer than any of us, including Nabari, expected to get ourselves to a complete deal. So we are in that process. It is progressing. We're still confident on that deal. And so I hope we can announce that soon. That's still absolutely progressing. As for the 8 zone, in 2025, we wanted to drill the 8 zone in 2024. It was a matter of priorities. We really needed to focus on the definition drilling to make sure we had 18 to 24 months of definition drilled, stope engineered mineral inventory ready when we turned the mine on. So we prioritized that. In 2025, we will drive out from probably the 12 level, get ourselves lateral a bit, and be able to drill the 8 zone from a good angle. So in 2025, for sure, we will get on that.
Hadley wants to know if any of your debt may be going to be convertible, and if so, will it be at a fixed price or a percentage discount?
So we don't have any convertible debt at this point, and that's not part of the Nabari term sheet. So no, I don't have, there's no convertible debt.
Javion asks, how much more infrastructure has to be completed prior to production?
So, great question. All of the major infrastructure on surface is completely in place. The mill is built. The tailings dam is complete as of about 6 weeks ago. We finished that tailings dam lift. The only major capital, and we're installing the camp right now, so it has been delivered. So there's some smaller components that are being delivered and installed right now. The camp, the mine dry, which is where the miners can come and transition in and out of their shifts. So those are being installed right now. The only large capital item that is otherwise underway is that connection drift, that green 1.2 kilometer long tunnel that's connecting the two sides of the mine. And we're 50% complete on that, and we will be done that by the end of March. So yeah, basically, we are basically built.
And Mike asks, does there have to be another raise prior to production, or are you capitalized for it currently?
When we went out prior to announcing our announcement at the end of October, where we did the $27 million raise and announced that US $35 million Nabari loan, we had done a detailed internal calculation of what it takes to get this mine through restart and ramp up, including working capital and contingency. So we went out to secure that amount of money. If this is mining, things could go wrong, so I don't want to promise, but based on our, working capital, including contingency, conservative expectations, the amount of money that we lined up at the end of October is the amount of money that we need to get ourselves into cash flow at the Madsen mine site.
Landon asks, are the permits contingent on any other studies, or are they already issued?
They are already issued. There's a few, we certainly, the mine has been in, it was shut down. Now it's in sort of semi-operational status. And so, for instance, when we turn the mill back on, we have to turn some of those from suspended to active. But those are conventional changes to a live permit. So there are no permitting barriers to turning this mine on.
And Cassidy asks, are there any subsequential metals that you will also benefit from?
This is a gold-only system, which is great in a lot of ways, because gold is a heck of a commodity to be producing right now. But there are no other byproducts in our system.
And last question, you can close with this, Gwen. Why do you say investors should consider West Red Lake Gold versus GDX or other major gold miners out there? Give us your closing remarks with that.
Yeah, for sure. That's a great closing question. So, GDX, I've spent a lot of time investing in the gold space. I did that as a job. I was a newsletter writer before I changed to come and join West Red Lake to work on this story. And if you see a gold bull market coming, you can absolutely own GDX and own major gold miners. And especially early in that market, as we have seen for the last 6-8 months, they can generate some really nice returns. But if you want better returns than those, and especially better returns as you get a little bit farther into the gold bull market, where we are now. The place that you get better returns is from companies pursuing aggressive growth. You can see that if you just compare even the major gold miners, the ones that deliver the better returns are the ones that are adding big new mines to their production profiles. And if you're looking at more speculative, slightly higher risk, then those are the ones that go from zero to hero, to use that line, right? We're going from zero production, only needing, we are a cash hole right now. We have had to raise money and spend it and put it into the ground. We are transitioning from that to producing gold and being able to sell that gold into an incredibly robust gold environment. That is the argument for West Red Lake Gold versus the GDX, that we should be able to deliver larger leverage to the rising price of gold because of the fact that we're going from zero to producer, and new gold mines are a rarity. There's very few other companies out there that are putting new gold mines into production in this market. And so I really believe that West Red Lake is going to stand out in that environment.
Perfect. All right, Gwen. Well, thank you so much for joining us on the conference, and we look forward to continuing along with your journey.
Thank you so much for having me. Thanks everyone for your attention today. I really appreciate it.
All right, everyone, stay with us. We'll be right back.